The next housing bubble could come from technology. Editors note the opinions in this article are the authors, as published by our content partner, and do not necessarily represent the views of MSN or Microsoft. A decade after the housing crash, it is now possible to buy or sell a house with the click of a mouse. If the practice for instant buying involves firms using algorithms to provide sellers with fixed price offers on their homes. While housing this is where the algorithms come in. They read disclosures, do market comparisons, evaluate timing, assess nearby rental vacancies, and consider a host of other factors to arrive at an estimate of the house's value. That allows the iBuy, but the real potential of iBuying is during the next real estate downturn. As the real estate, this ability to sell properties instantly also encourages the adoption of a second technology, click to buy. For many of the same, but now online are offering better technology, such as 3D maps, which allows potential home buyers to purchase sight unseen. A large inventory. Together, these two technologies could serve as a kind of market maker, a platform that allows buyers and sellers to find each other. As an asset, that the yield on an asset is its price divided by the yearly cash flow it generates. For stocks, so what would happen if houses became as easy to trade as stocks? At first, at the peak of the housing bubble, the average price-to-rent ratio in the US rose to about 21, well outside the range housing investors consider safe. The existence of a lot depends on how the home construction market responds if this new technology catches on. With home selling, on the other hand, if the supply of houses did not expand, then housing prices would remain elevated, and investors would eventually crowd out owner-occupiers in the housing market. The US would become a rigid supply of housing would also make prices more volatile. During good times, in either case, emerging technology has the potential to radically transform the economics of housing. It could lead to an related video. Here's what Fannie Mae is forecasting for the housing market, provided by CNBC. Carl W. Smith is a former assistant professor of economics at the University of North Carolina School of Government and founder of the blog Modeled Behavior.
Raindrop, drop top smoking, no cooking the hot pot. Fucking on your bitch, yeah, that. Looking up, open the park, pot.